Welcome everybody to number 50. We are now at Town Hall number 50, and we've got an exciting one today. We're going to talk about what crypto nerds want from their credit unions, their credit union. And no, I am not insulting our guest. He will introduce himself that way if I don't. So
yeah, no, I'll be the first to. I'll be like how crypto am I?
Yeah, you also call yourself a crypto weirdo at times. I've heard you
sure.
several different things. But before we go on, let's just get into our sponsors here. We're fortunate to have some sponsors for this. CUNA Councils. If you haven't been to a CUNA Council meeting, they have one for just about everything, whether it's marketing, lending, IT, operations, CEOs groups. There's something for everybody. And the most important thing is that the collaboration that they bring, and they understand that. They know that their meetings are a time for collaboration. As a matter of fact, I was just on the JAC meeting, and it's going very well. Lots of great information in there, talking about new lending products and different ways of doing things. So very exciting. Make sure that you sign up for the councils. I think I'm speaking at the lending one and the IT one coming up. So very exciting. Our newest sponsor, I'm proud to have Correlation. Correlation is a provider of core services for credit unions. They're the only dedicated credit union core. That's all they do. I've known them since they started their product. Jeff Dent is a good friend of mine, and they reached out and said, John, we love the town hall. We'd love to sponsor. And boom, here they are. So we're so thankful to have them. For those of you that have not seen Keystone, we suggest check it out. Very cool stuff. CU Broadcast, my partner in crime, Mike Lawson. I don't think he's here today.
I'm here.
Looked. Oh, you are here. Awesome. Awesome.
I'm right below you.
Said you could make it. Okay, very cool. And then my company, Best Innovation Group, for those of you that don't know, we do growth for credit unions. We do voice services. We do digital strategies. We also have something called the Innovation Club. All of these things will be out there. You can find it on the website. We appreciate the sponsorship. Let's move forward. And brought to you today by me and my partner in crime. Whoops. Oh, usually it's a picture of me and Mike. Oh, moving forward. All right. So we've got a webinar coming up, Mike. Did you know this? It's called Moving the Goalpost.
I did.
3 things you can do right now for the accelerated pace of change. I'm actually doing this webinar. You can sign up. It's coming up Thursday, March 18th. If you just go to big-fintech.com/webinar, it's going to be cool. We're going to talk about things that literally you can do right now. Because as a matter of fact, we were just talking about this on the last GAC piece. The CEOs are onto us. They now know, since we made everybody work from home in 2 days, that when we tell them it'll take 6 months, they're not going to buy it anymore. So we're going to see that pace of change is going to improve. We're going to see people looking for new services. For example, risk-based. I've seen a lot of credit unions expediting their risk-based holds. Mike, you know how when you put money in an ATM, you don't always get all of it. You know, if you put 2,000 in, you might not get the whole thing. Well, that's some credit unions have it where you do, because you've had a relationship there for a long time. Some don't. And it hasn't been a big concern, but now that everybody's using the ATMs, that's an example of an expedited feature that people are going to, maybe take off the backlog and make it a front log type of thing. So we're going to talk about those things, and it'll be good. Let's so sign up if you can. Let's move on. There we are. Guy on the left is me. Guy on the right is that dude over there, Mike Lawson. And couldn't do this without him. He's been a friend of mine for a long time. Let's keep going.
Indeed.
We're moving. Hey, look at this. We have Chris Hemsworth.
You guys even straighten up the photo. I like that you guys do that. And you're like, well, why the crooked photo? See, you don't.
We fixed it.
If you don't keep things a little askew, you can't look at things the right way.
So, oh no, this is Chris Hughes. I thought we were going to have Chris Hemsworth on. I thought.
Oh well, look at there. I left my hammer.
Yeah. So, by way of introduction, Chris Hughes has been doing this a long time. He's a gifted hacker and an ethical hacker. He was the first one to hack the iPhone. He was one of the first to hack all these mobile pieces, and now he's working in a couple other spaces, particularly in the cryptocurrency space, as well as just what we call, we're going to talk about this a little bit, decentralized finance, which he's an expert in. And you'll notice behind him, he has a collection of ATMs, which is very exciting. Not everybody who comes, and you seem to have a flamethrower from Elon Musk, which is that what that is? Is that an actual flamethrower?
It's not a flame. That's actually it's an actual art project that I'm working on. Right, it is not a flamethrower.
Oh, but that is the box it came in. I thought
it is not a flamethrower.
Oh, that's no fun. I was
It
hoping
did
for a
not
flamethrower.
want. Now
Um,
is like mine. It is a flamethrower, right? But like,
Okay, but not
um,
one.
it's an actual story. I'm entering in as an art piece in the non-fungible token hackathon that's going on this
Okay.
month. So I'm creating the not flamethrower token NFT.
Okay.
So because this is not a flamethrower, right? So anyhow, I'm making some
Well,
like,
Elon does call it not a flamethrower, right?
yeah, he has to legally call it not a flamethrower.
Yeah. Okay.
So that's the reason why it's the not flamethrower. Now,
Okay.
I'm making the not flamethrower token or the NFT
Oh,
of
okay.
one art piece of a modified not flamethrower. So yeah,
Well, you win for best prop so far. Very
I've got some
excited.
good ones in here, guys. I do.
So you know, I don't do your intro justice. Would you mind? I heard you do it the other day with and a tall boy. I like it. So hit us with the intro.
Hit us with the intro. All right. So my name's Chris. I started out here in Southern California as a computer scientist and a mathematician. I had a very non-traditional way into getting towards finance. It completely is the strangest door that you could ever take to get into structured banking. So in college, in undergrad, I was actually a fairly decent poker player. And that's where I've spent most of my undergraduate and graduate time, was in actually playing Texas Hold'em poker. And then I actually, my graduate studies work was in random number generation theory, and I came up with a different way of shuffling cards. Now, this is all germane to the story because my startup in college was a company called Full Tilt Poker, which ended up becoming the world's second largest online poker company.
I heard that. Yeah.
Yeah, people have heard of that. Well, a couple movies were made about it. The feds got involved.
Well, there's one coming out now, right?
Federal
Silk
warrants
Road.
served at my mom's house. You know, it's like lame. It's like real lame, man. So, anyhow, after all that got unwound, because it was a whole unwinding, during the process, there was a paper that came out written by an unknown figure that we still don't know who they are, about decentralized cash. Now, at that point in my life, I was taking humans' normal money and then digifying it. So it was a white paper that was of interesting. It was of interest to me because, so I'm blessed to say I read the Satoshi white paper before the network was live, when it was still being passed around in mathematics and academic circles as a potential way of moving money on the internet. Suffice it to say,
we all knew that would never happen, but yeah.
Yeah, I mean, and here we are, 12 years later. So I was a very early believer. I mined within the first 100 blocks of Bitcoin, and I've been an active human and a participant in the network since its inception. No, I'm not Satoshi. I don't know who they are. I have experienced some of the weird pitfalls of being a crypto pioneer. I lost a significant percentage of my coins on Mt. Gox. I was a trader there. But that's what happens when you put your digital assets in the Magic the Gathering online exchange. Is well, who'd have thought the Pokemon trading post was like a bad place to put our money? But
yeah, I wouldn't have thought that. I would have thought it
look,
seems so stable and strong.
No one had written the software. Okay,
like
let's just call it what it is. Like, we can laugh about it, but no one else.
Well, you can't label it wallet.stl and not expect people to download it.
So that's the thing, right? So I got involved early, and I believe in it, and I could see its value. Number one, because it was I believe that if Full Tilt had moved to a Bitcoin platform instead of the centralized banks, we would have been able to sidestep a lot of that regulatory ire.
Right.
Because that's just, once you have a human being decide, I'm going to take my money outside of these
the construct that's already there.
then it gives you 2 steps of like removal in terms of liability as to whether or not this is something that a person does or doesn't want to do. And now, mind you, at Full Tilt, we were dealing with money laundering and all the same things that you deal with in traditional, like anytime you deal with any sort of actor, there are people who purposely dump chips. So that was a really good training ground for me to get into the space that I'm in now. And I've just been a practitioner of the science of crypto from a software perspective and a science perspective, almost from its very beginning. Now, I wasn't an early believer in Ethereum, but I am a very strong believer in it today. And so most of the work that I do in my day-over-day work is done in on the Ethereum blockchain. But in between me, like, yes, I was an early believer in crypto. You get a kind of fun run-up. Full Tilt was successful. That permitted me a style of life where I'm not saying you're post-financial, but you're just not struggling to like find a job. I was an investor at that point. And then I could spend my time focusing on harder computer science problems. And security of mobile phones was one of the first ones that I attacked as just a security researcher. And that's something that I do in all these systems, is look for the vulnerability in the attack surface. The cool thing about the crypto blockchain is that, or crypto blockchains, is that, like, I understand the cryptography. Yes, I lost a lot of money in these exchange hacks. But I understand how I lost that money. I didn't have the custody of the keys. I didn't have, like...
Right, yeah, that wasn't, people don't understand that wasn't somebody broke crypto. Now, you and I can dig into quantum at some point if you really want to go down that road.
By the way, I follow that science as well really deeply, because I think if you believe in crypto very strongly, you have to look at all of the potential adversarial threats for it.
Yeah, and asymmetrical keys and quantum is going to be true.
It is going to be the big thing. So, like, believe me, if A's 256 gets broken, we have bigger problems. Okay,
right. We have much bigger problems, right?
Yeah, the world is flung into chaos. If that's the thing.
So currently today you have a company. I've forgotten the name of it now. Sorry, and I looked up.
It's called Trust. I mean, it's been a stealthy thing. So I'm a partner. If you go check out my LinkedIn, I'm still an active partner in a thing called Codable, which is an open source
Codable, right?
And what we do
also, sorry, go ahead. Sorry.
I was saying what we do is just basically open source our work to financial institutions. So everything that we're building is the Red Hat approach to software and maybe backends as a service. It's just like, hey, if you want to use this open stuff, you're more than welcome to use it. Just remember, attribute the license. If you build on top of it, make sure your stuff is open too. It's just like the standard practices of open source software apply. I think there should be a world where practitioners of open source software, kind of start to build enterprise solutions that, and crypto.
Well, and the model it's been around and it's sussed out, I believe. And then also you were an engineer on Jpm Coin, right?
Yeah. So Jp Morgan is built. So let's talk about how their coin works, okay?
Okay.
And how Quorum works as a whole, because I've been an outside engineer and a hackathon winner on the Quorum hackathons. So I've built on top of their chain. Now, you can, any one of your IT departments can log online. If you're already Azure customers, you can do this today. You can go to the managed blockchain section of your Azure account and then spin up a Quorum node today. Okay, now this gives you
2 clicks and you got a node.
And now you have a node. Okay, so now what is this? You run your blockchain. You are the master account of it. You are now a node. Well, what you could do is you could federate with others. And this is what we're kind of proposing in this world of managed chains in the first place, is that we start up these things and build trust networks amongst us. And now we have a common piece of software that's patterned after the Ethereum main network that we can all use amongst us. We don't have gas fees. We don't have any of those things. Like, none of that is real here on our chain. But you're like, but everyone can see everyone else's stuff. You're like, that's a problem. No. We also have obfuscated transfers as well. So you're on these side chains, we can do that. We can't do that on the mainnet because everyone has to see everything, right? But here on a side chain,
it's a different model. It's permission.
It's a different model. But we still have cryptographic certainty against the mainnet. So what's really interesting is we still have an audit trail that can be inspected on the mainnet without even having to look at our systems to say, so long as those checkpoints are hitting, every 15 blocks,
right,
everything's groovy, we know. And so this is the world that a bunch of us are like positing, okay? So let's think about how the internet was made. Let's just rewind time a bit.
sure.
Let's think about and just overlay these crypto networks and just say that they're strong allegories for how the internet worked. At first, there was just the ARPANET, the one network where everyone was trusted. And then you gave everyone like keys and they could all do everything on the main network.
Right, meant for universities to
Yeah,
connect people over
highly
the
trusted
wider
participants. So like big value humans having access to the lowest level of the pipe.
Right.
And then Cisco and other advent companies came around and they were like, what we're going to do? We're going to take that main internet address that you give us and we're going to break it up into smaller side private internet addresses that we can then turn. Now, the only way we were able to get to the scale of the internet is because of this decentralized breaking up of it.
Sure.
The fact that people are expecting the Ethernet main chain to do everyone's transactions is
it's insane. Yeah.
It's insane. No reasonable system in the last 50 years has been built that way.
Well, I like to liken it to this, and it's interesting because you have the ATMs behind you. Most of us on the call, and I'll point at our president, Kevin Sarber there. Kevin, it was what, Sirius and who was the other one? The other big player, Plus. Right. So for years, and you look too young to know this, Thor, but those ATMs, man, if you drove to a gas station and you'd have to look at all the little bugs on the gas station.
If you had the right one on the back of your card.
Right. And some of them were just slightly different. They kind of looked the same. And so it was like you were rolling the dice as to whether or not you
am I pulse, am I glow, am I,
Yeah, am I what? I don't know. And so, but what happened was Sirius and Plus, what was it, the 90s, Kevin, that the kind of the late 90s that conversion happened, and it created the gateways that I think, that are intact now. And those gateways have rules on how they connect. And it's interesting because, you may run your card at Target, and because you're on a credit union, you may go through Star and 2 other networks and pay some tolls along the way.
And so the thing, we understand that this liquidity provision is also true in crypto. We're not inventing anything.
It's true in the space as well.
This is like we're just running into the same problems at a different scale.
Right, it always runs into the same problem. But let's back up a little. Let's back up because
clearing is a problem. Net settlement, this happens, okay? Net
I have to be careful with Chris because the two of us could go on into nerddom very, very deeply. So let's rewind a little bit. So you've been working with Coin, and
so JP Morgan, okay, let's rewind a bit. How strongly does JP Morgan as a company believe in we'll say Ethereum related technologies?
Well, to begin with, the CEO of the organization, about a year before he talked about that, basically said he'd fire anyone that was interested in that sort of thing.
Now, I don't think I think they cut off his mic early. He's like, I fire anyone who's interested in these services and get in at under $35.
Right. Yeah, I think that's what he really meant. Yeah.
Okay, it's I think it's I'd fire anyone who bought it at $240 and then had to write the ticket.
Right,
right, seriously.
Yeah.
Tomorrow, you should have been in at 20 like the rest of us.
Right. But he knew. He knew because he put this together.
He's also, look, it's an unregulated market. You're allowed to dump on it in the United States and pick it up in Europe, which is what Morgan Securities does.
Right.
They're actively pooping on Polkadot. Meanwhile, Merrill Lynch and JP Morgan Securities are trading the exchange traded product on SIX right now. That's look upable in your Bloomberg.
Right.
The interesting truth of this is that Jamie Dimon's Ethereum focus, they have more staff engineers than Consensus, the creator of Ethereum. Mm-hmm. So JP Morgan as a company employs more specialists of the language than the creator of the language does. That's an interesting factoid.
Yep.
They have a red team, a blue team, and what we call a purple team. And so there are the current quorum team is the purple team, which is what got squirted out into Consensus. And the blue team is a group called Onyx, or the red, depending on how you look at it. But they have another chain called Onyx that's Ethereum based as well. that they're using for a settlement coin. So what is JPM Coin? It is a technology that they're internally calling Onyx, and this is a settlement unit because
it's an instant settlement platform that avoids foreign.
But they do something like $26 trillion a day in.
Well, yeah, because it also arbitrates between rates and it can settle the rates, and that's the big thing. So
and that's what they're basically figuring that out so that when the regulators come and say, do you have traders that are like on IM back and forth doing this? You're like, well, at least, you know.
Right. Okay. So I want to stop you there. So the reason I pointed that out is now everybody's got your credibility. Everybody gets it. They know that you're not just a flamethrower guy.
Fair enough.
So recently, you know, we've been having a discussion. You just recently, you know, won an award for this idea you had around ATMs. So I want to make sure we get to the premise of this, because the premise of what you said to me was so amazing. You know, we are looking at a gentleman who does not have nor need a bank account. Every asset he owns is in crypto.
I'm 100% crypto human. Yeah.
Right. 100% crypto human, I think is what you just said. So with that in mind, you know, I want to start off by talking a little bit. I'd like to do what you won the award for at the end of this, but right now, there's this growing number of a culture for you that how many, you know, and I'd like to, here's a couple questions for you. The first one is, how many more of you are there?
Oh God, right? So I know hundreds of me. I know hundreds.
Right. So we want to get to why Crayons would be interested in your group as a membership. The second piece I wanted to get to is, well, what are your needs and how do they differ from a normal person, which I thought was fascinating when you were explaining that.
Ours are fundamentally different needs.
Right. And then we'll talk about, like, you've come up with sort of a solution or what you see as a solution. And we
had to invent our own solves is the answer.
Right. We were just recently on the phone with, and you've been involved in Wyoming, which I want to get just to touch on that a little bit down the road as we get into that Wyoming and New York have both expanded some of their crypto laws, which has opened the door for some Crayons and whatnot. So with that in mind, let's start off with you as a person. Hey, I've got this guy, Chris. He wants to join a credit union, but everything he has.
Yeah, you know. Let's just talk about, like, I mean, like, we can say Chris, I can say Alice, I can say Bob.
Right.
We'll make a Bob in this case, or we'll make an Alice. All right. Alice, in this case, she's a clever young lady. She put in, you know, $40,000 in March of 2017 in Ethereum on the top of it, because she was at South by Southwest and they were there, and Ethereum was $7.
Right.
So okay.
Now it's 1,323.
Now it's 1,320. So she's
every $7 she has
gone into an entirely different stratosphere of wealth, and now I mean, she's still a copywriter. She's making 70 grand a year. She has 2 million in crypto net worth now, and that's interesting. So depends on the level of sophistication of the person. And the hope would be, as you've kind of had this asset run up, you deeply educate yourself in the process of the thing that you're invested in. But, like, whatever, I know people who are super wealthy and they just sat on their hands, and that's the case. I know people who traded it like I did every day. And then got deeper in the process. But in this case, Alice is I mean, she makes 70 grand a year. In theory, she should be able to qualify for a $700,000 home in this market. Like, she's got enough assets on hand that should be the case. Now, she can walk into Signature Bank. There's 2 banks in America that will take her in as a customer and treat her problem seriously. About getting a origination of a home loan. Now, mind you, she could buy that place, collateralizing her money to herself. Okay, so this human being invested in Ether, so she can take this thing. For those of you who are not familiar with this process, if you go to CoinMarketCap and you go look at the list of coins, you'll see Ethereum is the number 2 coin. You go down a little bit further, you'll see a coin's like 14th or 15th. It's called Maker. Maker is this lending organization. It's a smart contract that lives on Ethereum. That's what Maker is. Maker issues an asset called DAI. So if you go see the DAI dollar stablecoin, it's always at $1. You see that there's like $1 billion of DAI in the circulating supply. Well, that $1 billion of DAI in circulating supply is custodied at Maker, okay? But it's custodied as 3 billion to 5 billion of crypto. So what Maker does is say, I will custody your crypto and I will hold on to it. And based on a fluctuating market rate, I will liquidate that position if it falls below certain automatic contractual means. But in the meantime, like a pawnbroker, I will lend to you against your asset in the short run.
Right. So she could theoretically go to Maker.
Not theoretically, she can
no,
totally.
Right now. You could go to Maker, you could purchase DAI, you could convert that DAI to dollars, go to Coinbase or something.
And then deposit those dollars into her Coinbase account and then walk up to the loan officer and say, here's my proof of funds.
Right. And here's my, but the challenge comes when you go to do the title work and when you go to do the insurance and when you deal with all the other things that go with that asset.
Now, but she could, in this case, in this story, she could buy the asset full out with cash. Right. She's looking for someone to originate the loan to make that an easy process.
Right.
And still, that's a difficult thing.
Right. Exactly. So theoretically, she could afford this, but let's pretend she walks into not one of these banks. She walks into a normal one. What happens?
Like at this point, like there's just, you know, they're going to go look at her, you know, pay stubs.
Her job. Yeah.
Her job. And the answer is probably a very quick no. Like,
right.
Unless you get some clever person in origination to kind of take this seriously. Okay. So, and like to take the scale downward, I have a friend who just bought a whole bunch of Bitcoin in March of last year. At 30, at 800 at the dip. And he's had a 10x run up. And this is less than 1 year time. Would like to buy a car. Could collateralize, buy the whole thing against himself. Can't do that right now. Can't walk in. This is a 22-year-old kid, doesn't have any credit, has $300,000 in crypto. Could buy the car if, like, you know, doesn't want to take the capital gains hit. Smart enough to know he doesn't want to take the cap gains hit. Wants to lend and collateralize to himself. So that's the difference. Is that
so far what I hear from you is this segment of people, the crypto nerds like yourself, what they want is access to financial services.
We want the same financial services that are available to an entire other class of people for a differentiated asset.
Right, for a differentiated access. Okay, so then you start thinking, how can I do this? What's the trick here, right?
Yeah,
and you come up with this
clever idea. This one for a while.
Yeah. Okay, so and this explains why he's not some sort of ATM hacker. Well, he probably is, but this will explain his collection behind him here. So give us the backdrop on that. So you started thinking about
why is there a nice cache of cache machines?
Yes, exactly.
So inside an ATM, and I think we talked about this a little earlier. These are what we call out-of-network ATM. Right. Not JP Morgan, not Bank of America.
Not some bank. They're like a third party that runs an.
They're in a bodega or they're in a grocery store.
Yeah.
And what happens is that when they're in a bodega or a grocery store, generally the bodega or the grocery store owns the machine. So they went off and paid $5,000 for this ATM machine. And the way they make their money is on the $2 on the ATM fee every time it drops. Right. That's how they make their money. So,
by the way, those are huge in the cannabis stores here. That's how they.
That's a giant space. I mean, for sure.
Yeah.
And so, basically, there's 20 grand inside this machine, topped up. Like this one here is a single cartridge. It can hold one. One. This is like a one that you have at an airport that has 3 cartridges, so that you could put up to $100,000 in it, or $150,000 in it. So depending on the amount of cash that's inside it, and because you spend $200 to go change those cartridges to send a Brinks truck to go do that, or to go change the paper, or to go. So there's a service fee to go do that. So they fill it up with as much cash as they possibly can, so they don't have to do that drop and pick up. Well, that money is taken in the custody owner. It's custodied in the grocery store or the gas station or whatever, and basically taken out of network, taken out of it's no longer leverageable cash. So you walk by any of these ATMs, and you see $20,000 of dead cash on average.
Right.
Every time you walk. If it says
now, just to stop for a second, those ATMs are so small. I'm going to ask Kevin, who was in charge of all our ATMs at Westcom, and we ran our own switch, and we had hundreds of them. Kevin, how much was in the average giant ATM that we had?
Not much more because there's really not much more space, but you're about 150,000 was the most.
But still, so 150,000 like in cash there. Now, in the cases like a shop owner is probably not going to take that big of a nut, but a pot shop might. A very large diesel gas station.
Oh, the pot shops have to have them come out and refill the thing 2 or 3 times a day.
Yeah, like a big diesel gas station.
Absolutely.
Like one of these ones on a they'll have 175,000 in a smart safe. Very similarly, the same thing. Again, all of this is just cash custody there, dead. So I got to thinking about this because I was just like, this is well. Number one, I lend to myself, so I create synthetic dollars like all the time. It's how I live. And so I started seeing all those real dollars, and I was like, there's got to be a way for me to, like, I can go talk to the nice people at Maker. I know them personally. I can say, if I became a qualified custodian of a whole bunch of cash, could I synthetically make this in the crypto market so that we could then in turn provide this as liquidity provision to crypto? Now, for those of you who don't know, what we call the DeFi lending space, or the distributed finance space, only had $1 billion in total locked up value last year. That number has grown to 46 billion as of this week, and it's growing by something like 5 billion a week every week now.
And so the 2 terms we hear are CFI
and DeFi.
And I hear it as I often hear it as DE, so decentralized finance, but you're calling it distributed finance, which is about the same thing.
It's basically the same thing. I mean, decentralized distributed finance. It's just like what we're trying to do is show. Like my securities attorney partner is making arguments to DFS and people like at FinCEN and saying a multi-sig wallet is a qualified custodian.
Right.
Like if you have good controls, like it should be the same thing. Like, does it have to be actually wrapped at a bank, or could it be at a brokerage firm? Could it be at an RIA? Could it, like, what level down do you not trust the person with the digital asset? Like at some level, right? You know, because we're asking these questions and really, really pushing to the point where we're saying, it's like, what does this actually mean? So what I came to this is I saw somewhere between $7 and $20 billion of dead liquidity just out there.
And this is all the ATMs that are around in bodegas, just sitting around with money.
Yeah, I mean, just like I contacted the manufacturer and I got their sales numbers, and I was like, "Give me your North American sales numbers," because I had been reverse engineering this ATM, and I was like, "Okay, we have security vulnerability discovery is a very interesting thing. When you find vulnerabilities, you go to the manufacturer because that's the responsible thing to do. You say, I found these things you should fix, and then." Hope, generally I do it in a way that it's not like, it's always like, hey, I bought these machines, they're mine, I've discovered these interesting things, you should probably fix and address these things because like I'm giving you a responsible disclosure.
Yeah, similar to what you would do for any software provider or hardware provider.
Or hardware or network. Now, the trouble is that I understand the intractable position that these ATM manufacturers are in the sense that they've deployed these machines.
Right. It's kind of like finding a vulnerability in a gas station pump.
So responsible disclosure in that space has been an interesting one with them. And so I've come up with them and said, we need to at minimum in future like releases not allow this attack vector to happen. Right. Okay. Like because the current attack vectors are pin pad theft and camera theft and kind of the cheeky little things. But I found one that was a little more malicious. And so it's like, let's not have that be a thing.
It's interesting too, just a quick aside, but I would imagine, I'd like to get your perspective on this, because of the digital nature of the pandemic, ATMs have been stuffed much fuller than they have in the past.
And for this reason that I'm like, you're going to rely on these things more and more.
Right.
And so part of my security protocols actually are now taking command and control away from the actual physical ATM itself, and then imbuing that in the trusted software on the mobile phone of the person. So pin pad entry of the future will now occur on your device and not on the device over there. So by creating these like little separators, you now start reducing risk massively this way. Because now it's like,
there's no shim that they can put in, a la the target hack, right? Okay, gotcha. Yeah, you can't start reading buttons that people.
You can't read buttons that weren't pressed in the first place. You know.
Right. Okay. So now you got all this money out in the ATMs. You notice this. You make the call. And so what's the play? If I'm a credit union and I've got, these I've got all these ATMs everywhere, and I've got
Well, the
this
first thing
situation
is like, hey, like credit unions, we could offer a yielding. So there's a couple things that to the human beings I'm talking to on this phone. If you happen to be an executive or a decision maker at a financial institution, and you want to service the needs of clients like me, and you'd like to, there's definitely an opportunity there, because I would like a Visa card that automatically does the automatic lending to myself, and that's my.
That does the maker transaction.
Yeah, automatic.
Okay.
So I just deposit it in, and then if I put in a Bitcoin, I get $12,000 of credit immediately.
Like that. Okay.
Like, because like Bitcoin's north of 45, liquidity rates being what they are.
So one of the things they're always going to say is we don't want to lend on that asset, because though Alice is worth 700,000, she's really only, you're saying that, hey, we're not going to lend based on the 50,000 that Bitcoin is right now. The 12,000 is the floor on that.
The 12,000 floor. I mean, Bitcoin has to fall to 12. You have the custody of it. Bitcoin has to fall to 12 before you lose money, and I can find someone else who will go ahead and provide the capitalization.
Right. So let's say that it does fall to 12, then
you
they
liquidate
just cash it out.
Like, it's automatically it's liquidated at 24, to be honest.
You're okay.
Because like that's and then she has the collateralization option, and she has to call it at 24 to say put in more collateral or yeah.
Okay, gotcha. That makes sense. Okay.
And that's how it works on Maker now.
Okay. So I got this debit card that I can walk up and use your ATM, and what you're saying is that you're using the collateral of the ATM. So the 20,000 that's sitting in the ATM dormant, which will go down over time as regular users use it, right?
We keep a 15-minute time behind, and basically what we're saying is that value that we have there, we've created as synthetic dollars, and we lend those in the DeFi marketplaces.
In the DeFi marketplace.
DeFi lending spaces, you can get between 6 and 8% on stable currencies right now.
So the credit union would basically have, for every person that uses this, like you, a quick micro loan, depending on what it is, for at up to 66%, which is interesting because we're seeing some of that in what we call BNPL, which is the buy now, pay later piece that you're seeing from PayPal, and pretty much every retailer, eBay, those kinds of guys have that built into their platform, which is another form of that commoditized lending around that, but it's not using the crypto aspect of it.
It's using the underlying, it's collateralizing against the asset itself, and then and wrecking the credit on the other side. You have a far riskier or far riskless. I mean, your risk is almost you have almost no count. Maker is an over collateralized counterparty. Like they're only making money.
Well, they're like a loan shark because it's the only thing they can do. It's like the checking.
No, it's like that's the thing. There's no competition. Like, do you think I like collateralizing 3 to 1?
No, I get it. That's what I'm saying. They're like the payday lenders of this right now.
But they're the only game in town. So
there's an opportunity.
Or to tax it, and you don't want to take that. So
So there's an opportunity for and so let's go back to the crypto nerd thing. So you say there's a lot of you out there. I personally believe there are a lot more than hundreds. I think there's.
Oh, I mean, I'm saying I personally know hundreds.
Yeah, I think it's a massive amount at this point. And one of the things I'll tell the Crayons that are out there, and I think Jonathan, you did this report for me once. Jonathan is with Hudson Valley out of Poughkeepsie in New York, and a longtime friend. Jonathan, did you ever run that report on how much people were spending out of your credit union into crypto?
We did. I'd have to go and refresh it, but I had our BI team go and run that. It wasn't as much as I thought it would be, but it was absolutely there, and it's a growing population. And then when you
and then you know that's an accretive number,
right.
So if they did it last year, good answer.
Right. Well, that's the whole point, right? And when you say I'm not up on the accretive, but I think what you mean is that money's gone forever to some extent.
Well, I'm saying it's out of their hands, and it's larger now. So it's out like
it's been grown. It's been grown.
If you'd like to re-custody it, now you have an opportunity to increase your balance sheet by saying, "Hey, we know you have it. We now are using the same technology that.
But
Coinbase-
where I'm getting at, to your point, I think is a very valid point for Jonathan. So Jonathan, that's just one more of the 1,000 razor cuts that's depleting the deposit capability, that's reducing the liquidity for loans, right?
Because
Right,
you can trust those
exactly.
people. You can trust your outbound depositors to go ahead and recustody that Bitcoin back to you. If
Right.
it's coming directly from
But they
Coinbase.
don't want to recustody it because they're going to get capital gains.
No, a
This is
transfer
the
won't.
answer.
A transfer won't have that happen. So if it's just.
Oh, no, I'm saying, but if they don't have your thing.
Yeah,
so
exactly.
Jonathan, this is the
Without
thing I
lending.
was thinking about.
Without lending, this is like a terrible
Yeah,
idea.
so
What do
Jonathan,
they give
that
it
money's
to,
gone
here's what
forever
happens.
without this.
They give it to Coinbase. They give it to
Yes.
Coinbase because Coinbase does it, and then Coinbase gives you 4%, and you guys are like, "Are you
Yeah.
kidding me?" Like,
Yeah, I moved, I don't know how much it wasn't that much, and I spent $139 damn dollars, and it took like 2 hours to move. But if I could send it to Hudson Valley and it was lent and became money in my account that I could use again, that's magic.
like a BitLock.
Yes, exactly. So
BitLock. If you just did a BitLock.
okay, so let's do this. I never do this on this show, but I'm going to do it. So we're going to whiteboard for a second because I just got to get my head around this. This guy, Chris always blows my mind. Okay, so
Well, you're very kind.
This is the CU, right? And let's just use Coinbase as an example. Would you go with that?
Yeah.
Coinbase is probably the most popular, wouldn't you think?
Oh yeah, like Coinbase and Gemini. Put in Coinbase, Gemini,
Well,
Kraken.
we'll just use this one for now. So let's say one of Jonathan's members. Jonathan, did you see any average, any average amount that you were seeing? I'm assuming it was high, like 10,000, 5,000.
Yeah, I mean, it was in the multiples of thousands.
So,
so
were they wires or ACHs? I'm actually kind of curious as to that too.
So what we normally see are ACHs. We didn't see many wires.
So Coinbase does this really awesome thing. They have used the heck out of the ACH game. I love them guys. Like they're real smart cats. Like I'm a USAA customer, okay, and they're an investor in Coinbase. So my deposits reflect instantly. So if I press a Coinbase button, the money is moved out of USAA and immediately available as purchasing power.
But you know how they're doing that, right? They're doing that through the debit, not the ACH.
Yeah, they got something. They've got some
The
relationship.
debit system. I figured that out the other day. It's the debit.
But the other thing is
they're
that
using debit.
within USAA, I can see my Coinbase balance. That's the other
Okay.
thing. They've done a technology sharing agreement between the two, so I can see my Coinbase balances directly within my USAA login, which is kind of nice too.
Okay, so they use the 5,000 to purchase ETH, right? And let's say they get 5 ETH. Well, we'll make it cheaper. We'll say they did this a few months ago, or in 2020.
Say they got 20 ETH. They were $500 each.
Okay, so we'll call it. What'd you say it was? 10 ETH. Okay. All right. So they got 10 ETH at $500, a piece. Now we fast forward to now, and because of people are starting to realize ETH actually does something other than
look, it has always done something. It's just like the conversation has been like Bitcoin, and then ETH has just been like, well, they'll get to us at some point.
Right. Well, they knew but the other problem with ETH, and it's not something I want to go into this, is staking versus where we are. But we'll get to that. I'm not worried about that right now.
Well,
I don't want to bring that up because it's too confusing.
That's another rabbit hole.
Right, but we'll use this model. Okay, so now it's 2021, and Joe Member, his ETH is now worth what?
10 ETH is
5,000 of
ETH
ETH
is
is
20
worth
grand.
about what?
So it's yeah.
What'd you say?
It's 20 grand.
So he's got 20 grand. Okay, so he's got 20 grand in Coinbase. So tell us what happens if he decides to take that 20 grand that he has in Coinbase and send it back to the credit union.
So credit union has the new BitLock, BLock.
Well, no, let's pretend the credit doesn't have anything. I want to go with a normal transaction.
So now the whole thing is that they could. So what could happen is like, hey, you have your money in Coinbase. You don't get anything for it right now. If you'd like, come custody it with us, and then we'll give you accretive yield. So the first thing is just like bring that 20 back, and we'll lend it for you in the market.
Well, but let's say it's just an average user. So he goes, hey, I'm going to sell my ETH. So he sells his ETH at the number we have right now, and then in the
And then
US
he has
dollar.
it with the capital gains hit, loses.
Okay,
7
well, how
grand.
does that happen? So he goes to transfer.
So at this point, let's say negative option right now. A person needs money here, and they take the crappy option, which is sell their gains right now because they have an immediate they've had an unexpected
An
death.
unforeseen event like the pandemic. And
Yeah,
someone
they've had an
whatever.
unforeseen event, and they need $7,000. So
So they sell $7,000 worth of ETH.
So they sell $7,000 worth of ETH. So now
Call it 6 ETH.
So now, that's great. So now they have a $7,000 sale, and they actually have to pay the $2,500 in cap gains for that.
Okay. Did that happen when they sold it? It doesn't happen until they transfer, right?
Well, it happens at the sale, so they immediately have to. They're now subject at the moment that they ramped off from ETH.
So is it 250 or 2,500?
So what do you mean?
So they sold.
They had
6
20
ETH.
grand. They had 20 grand. Now they're selling 7,000 of it, but now they have 25. They had the short term. They had the short term capital gains hit, which was
Right, which is, but they don't see that. That gets reported when they transfer the ACH, right?
Yeah, that's reported
Okay.
as soon as the sale happens.
Okay, so that's what you're considering the sale. So they go, hey, I'm going to send this back to Hudson
Yeah,
Valley.
the moment that they sell that 7,000 in each, like the IRS is told about it. So like that now they have to come up with 2,500 as well to go ahead and cover their liability.
Okay, so they then go, okay, but so they just got an instant for doing this, for doing nothing, but selling this, they just got themselves $2,500 of capital gains.
In cap gains, just
Yeah, in taxes.
Right.
Okay, but they still got the total of this. That didn't get taken out of here just yet.
that didn't get
That's
taken
for
out there
taxes
just
down the
yet.
road.
Yeah, exactly.
Okay, so now they go to transfer this over to here, and they're going to pay again, right?
Yeah, so there's a wire transfer. There's $25
Yeah.
from Coinbase, and then 25 on the receive side as well.
Right. And if they do this again, and they did another 7,000, now they're
Yeah,
up
I
to
mean they're
5,000.
gonna lose 200 and something in fees and like probably $3 grand in taxes.
Right,
Versus
okay.
moving
So
the
this is
entire
a-
asset back and then just doing a simple line of credit against it for the tune of 7,000, and they pay it back, and it's a much cleaner deal.
Right. So smarter people are doing what you do.
Oh
which is
yeah,
lending-
I mean there's $1 billion worth of those smart people. I mean,
Okay. See, right. Okay. So now what we're insinuating is the Crayon could become like the Maker app,
yeah, no, I'm arguing that they totally could. I mean, they can
using the
asset,
ATMs as
they can-
collateral.
Yeah, they have the asset as collateral. They're not selling it in market. It's not. They're not trading it into anything else. So there is no permutation of the thing on ledger. Like to the IRS and to every like regulator I've talked to, this is clean and well understood case. Like this is very well understood.
I mean,
Signature-
so yeah, and this is
I mean,
so
Signature-
for us, this is similar to like a stock secured loan.
Yeah, exactly. It's a stock secured loan.
Yeah.
It's no different. And so Signature is doing this to me right now to the tune of more than $10 million.
But that's just for your ATM habit. Those are expensive.
No. This is my own personal. Like this is how.
Your ATM flamethrower. This is not a flamethrower habit.
Yeah, no. This is like in my own personal. Like I use MakerDAO, but I also have a collateralization with a traditional institution.
Okay.
And
So
it works just like-
Jonathan is in New York, right? That's one of the states that he has a possibility of the ability to do this, right?
Yeah, you guys can do this. Get it, and a simple bit license will allow you to do it, or you work with another custodian that does have a bit license like Paxos, and you can. Alternatively, like maybe my custodian in the world could do this in the future. So this is the type of thing that I'm looking at building a Wyoming trust company for, specifically for this, because trusts cannot lend their assets, but my digital trust can custody the assets and then provide a smart contract and a switch so that you can lend your assets. I can give you all the appropriate risks and disclosures and then make a marginal fee on that. So it's a slight differentiation on the bank lending requirement. And it will pass muster with the Wyoming banking regulators because we're putting the humans in control of their own decisions. So that's pew, 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 Wyoming friendly. you know?
Right, right.
They like that shit.
Okay, so I want to just ask Jonathan. So Jonathan, you head down to the room, you go, hey, I just got off this great call, and you know, and I can now do this, or I want to do this. How does that go? What do you think that feels like?
I think if I just sprung it on them
They're
immediately,
like, whoa, too much.
they'd be
Too
going,
much.
what is this? What are you talking about? I think it, from my perspective, it would be, there would have to be some significant educational prep done to the C-suite and the board to get this type of initiative off the ground. But it's probably not it's not a question of when or if anymore. It's more of a question of when, because I don't, crypto's not going away.
Not going away. And by the way, I also know that I'm in a very small percentage of people who's sophisticated enough to be doing this. And that it's a really interesting sweet spot.
Yeah,
$1 million in crypto, it sounds like a lot of money, but it's not. I mean,
so what do you think the upside is for a Canadian that was doing this in terms of?
One is attracting themselves to a sophisticated high net worth client that they're not servicing.
Right.
Number
So
one,
do you think that fits in the category of DeFi, or are they helping? Theoretically, DeFi is sort of an enemy of banks, right?
No, I wouldn't argue. No, they're just. I wouldn't argue that there's any enemies here. It's just like banks have been bad custodians of human. Like, you take my money and you give me 0.25%. Like, literally, I can go 8 in the overnight repo market. You can literally sit on your fingers with that one. No one likes that. Right. And that's not being good fiduciaries. And I think that the world and the challenger banks are saying enough of that.
No, I get it. So,
yeah.
So I want to answer, before we end this, I want to answer the question, which is, I think I got the answer. What the crypto nerd wants from the credit union is to recognize their crypto assets. It's that simple.
That would be helpful. Like, that would be a good start. Like, at least, yes. Not all of us. Also, I'm helping out in New York DFS's and FinCEN's hackathon right now. So I'm talking to the regulators very actively about this. Now, I earned my crypto legitimately, and I pay my taxes on it, and I do the thing. And I'm smart about it, and I pay as little as I can, all things considered. I haven't actualized anything, so that's we can make an argument for a different day. But the point is that these assets aren't going away, and they're not always used by bad people. That's also another truth. In fact, they're used by very smart people. And bad people are smart people. But smart people are smart people too. And you're throwing, there's a whole negative set of aspersions in this universe about folks who've maybe made their money in Bitcoin. And there are folks who've done it doing all kinds of privacy preserving, really idealistic things. I mean, there's a lot of predetermined assumptions, and I want to help traditional finance human beings understand that it's healthy to kind of challenge those, because in that space you're missing out on some really amazing customers and liquidity, and if you could get a progressive credit union or some financial institution to support you, if you go look at Silvergate Bank, that's the best example. This was a tiny little weird thing. They catered to the crypto industry and quickly got to multiple billions in assets under management.
Well, and what I think, the other thing I think it's interesting, having gotten to know you a little bit, and I find myself in a similar situation, is the philosophy of the co-op world is kind of closely aligned with the distributed world in a way, particularly around the credit union space. So I noticed that Paul Fiore joined us, a friend of both of ours, and he was on last week espousing these sort of things in a different way. So Paul, as we go out here, is this kind of what you were talking about last week to some extent? And is this the 2021 version of you trying to pitch home banking to people? As Chris alluded to earlier, that the way the internet sort of grew. And hopefully he's still there. I see he changed to his headshot.
You might have. Let's see here.
He was intently listening for a bit. But while we're doing that, we got 5 more minutes. Any other questions?
Yeah, I mean, guys, feel free to
Yeah.
want to open this up. And for those of you that want to follow me, I'm on Twitter at Choose CHEWS if you want to follow me there. That's an easy way to find me. I also do a thing on Clubhouse if you guys are Clubhouse humans. I do a thing on DeFi there. If you're not on Clubhouse, find me on Twitter and I can get you an invite or something. But yeah, I'm happy to share on this sort of stuff, and I want to be.
Well, I think it's the future. I think that to your point, Koreans are looking for a way to grow, and we're looking for, you know, one of the things that we have to balance, unfortunately, in the Korean space is we exist in some ways to help the underserved, but in order to help the underserved, you've got to have a balance of members that are sort of already served, if you will, to help you help those underserved. It's the same reason they were created in the, you know, years and years past, was all the farmers got together and said, you know, blah 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 is a useful person for you know, his fields are going to bear fruit even if the bank doesn't think so. We're going to give him a loan, and that's kind of what you're saying here. So
I'm saying this because, like, this is the space that has created a whole unique set of opportunities for people who would not have normally participated in financial technology and financial innovation. And here's the thing I really like. I like the nerds that I get to hang out with in this community. I mean, I actually really like them, and the reason is that they're fair. And these are Dungeons and Dragons playing, like, fair dice.
Yeah, Jonathan's got his magic cards right there.
Yeah, I mean, you know, it's like, come on, these are real fair people, and I think that you want fair people making your game, especially if the game is a finance one. So
sometime we'll have to have a nice talk about the DAO. I enjoyed that one.
It's like, I gotta tell you, like DAOs as a whole, or that's a whole.
That's just a badly written
perpetual organizations.
Yeah.
Let's just, like, we'll put a pin in that, but perpetual organizations are going to be a thing.
They are going to be a thing, and that one failure, just like Mt. Gox, shouldn't be the.
It is not the defining moment. No, right, I can tell you this right now. It is not the defining moment. Not even close. I know people who are making things that are like funding DAOs, endowments is what we call them, endowments, which are like minting organizations that will then in turn perpetually fund crypto in the future. Like I will, at the end of my life, give to an endowment. So this sort of thing is like we can handle perpetuity for quite some time.
Last question. So if Hudson Valley offered this service today, would you personally use it?
I mean, are you kidding? I mean, I could. I have an immediate need right now for more than 10 million.
There you go, John.
You know, Chris, what I'm particularly interested in is so we're in New York, obviously, and we also just converted to state charter in New York. So DFS is a new thing.
So I mean, like literally, I'm talking to the DFS folks. Like I'm in their Slack right now.
Okay.
Doing crypto stuff.
Cool.
Basically doing chain analysis. So when a customer walks in, how do you know that how do you know that my Bitcoin didn't come from Silk Road?
Sure.
And so it didn't. But I mean, and if it did, it came from the government auction that I bought it from with Tim Draper. But like the point is, which by the way is one of the most, like, Tim Draper bought his Bitcoin at a government auction. Stop and think about that.
I get you. So, but Jonathan, you finish your thought there real quick, Jonathan.
Yeah, no, I mean, and so that's the interesting thing is we're new to the DFS environment, but it's interesting to hear that DFS is actively involved with this, and so. And it's not something they've really brought up with us specifically.
Bringing up, but like I can tell you right now, it's because we don't have great tools for handling the private analysis of this stuff. I mean, I am literally in a hackathon as we speak, involving this. And the truth of the matter is that we're getting better with being able to share information. It literally takes all the exchanges to aggregate their information, governments to aggregate their information, Treasury to aggregate theirs, CFTC to aggregate theirs, SEC to aggregate theirs. So there's a bunch of people having to work together to kind of like make this stuff happen. And
Jonathan, it sounds like you're interested. We'll definitely reach out.
Yeah,
I'd like to talk more. You know, Paul, while you were gone, and I'll be quick because we have a deadline here. But I said, you know, is this the 2021 version of you trying to sell home banking, internet home banking to credit unions? I think that's what you were saying last week.
Yeah, it's smart people like Chris and with people that can help educate the industry on why now's the time and how do you get started. So I'm excited to be working with him.
Well, I enjoyed this immensely. Chris, I'll give you a buzz. Do me a favor and just, you know, keep track of your brother Loki. I get upset when he gets out. I find that, you know, bad things happen. You've been really awesome guest. Thank you so much. I knew you would be. Amazing chat. We'll get this out on the web and we will include a link to what Chris won an award for, which is in the AVs, and we'll show exactly him actually demonstrating this ATM process he was talking about, which is pretty cool.
All right,
And
guys.
as I said, as one of my tests of your technology, I shared it with Kevin Sarber, who has been working in ATMs since his early 20s, and he immediately got the concept. So that to me was very important, and I actually learned more today. I always do when I talk to you. Thank you for your time.
Thank you very much, man. It's been a real pleasure, and thank you guys. Well, thank you for permitting me to kind of have this forum to expand on this opportunity. So
No, it's great.
Yeah,
and I think we'll do some more
places in the space.
Yeah, I think we're going to collect up a group of people, and Paul and I are going to put something together to talk about this. So we got at least a couple of people I know are interested. So if you're interested in this and your state has
financial innovation is the future, my friends. Like,
right.
let's make it like
Give me a
internet.
buzz, and you know where to find me. Hit Melissa or myself, and we'll get it together. All right, guys. Thank you so much.
Well, thank you very much for your time.
Thank you.
Take care.
You all.